What's up, everybody? Welcome to the morning after, where we do some live Q&A, take a look at all sorts of things going on in the market, and we get to hang out. So I've got my chat window up. I'm gonna wait a little bit for people to trickle in here, and we're just gonna kind of go with the flow on this one. I just sent out the link not too long ago, so I'm going to give people a chance to find that and come on down. And we will go ahead and get this started. So still trying to figure out, sort of a long-term format of how we want to do this, and we'll figure it out over time. So I think today's session, really what I want to do is sort of encourage this idea flow. I saw yesterday during the live session on Alibaba, there was a lot of back and forth going on, which was fantastic. I like to see it, love to see it. There we go, Chris. I'm glad you're here. Chris, did you fix something on your end? Because I tweaked something on my end. So I'll give you guys, like I said, just a couple minutes to everybody kind of trickle in. And we've got a lot to talk about. Lots of markets to look at. Lots of events taking place. Tons of fun. Lots of cool stuff happening. So we got to check this out. We really got to dig in. All right, Danny, Chris, AJ, Dong, Tremblay, and Dean. Good stuff. All right, guys, I'm just going to start kind of digging into it. Now, if you notice, I kind of loaded up my schedule here a little bit. I had to move the John Deere event. And I did so. So remember, we were going to do it at 11 o'clock Central. I pushed it up to 10. I had a little boo-boo with the car, and it's got to go to the body shop. So I had to kind of massage and get the right time to get them to come over, and it's South Florida, so I don't trust anybody to do anything in a timely fashion down here. So there's that. So I had to open up the window, so I pushed up the Deer live event. Hope that didn't mess anybody up too much. Hopefully, sorry guys. I don't like doing this last minute change, but sometimes I just gotta accommodate life. So there's that. So I'm going to do a lot of talking here early in the morning, which probably will lead to, my voice sounding like rather froggy early on, but that's all right. So I think I've got the audio going here. Pretty much everybody should be good. So this is good. Okay. So before we get into the market reaction to Alibaba, I want to get into the reaction of life, of what happened, what's been happening. Maybe should I get my Ninja Trader up? Let me get Ninja Trader up real quick. I'll have this going on also, so we could take sort of a live look into the futures market. I can have that kind of going on too, so that'll be good. But overall, oh yeah, the elevator music. That's right. No elevator music. All of these are little tweaks I have to fix. Rather than going through the studio where they would do all that stuff for me, I started just going live streaming. It's just me, so I'm doing everything here. And I've got this neat little piece of software. I don't know if you guys have ever heard of it. It's OBS. It's open source live streaming software that anybody can get for free, which is awesome. And there's all these things I could do, like shifting scenes and putting up other stuff. And so I've got that, and I can tweak that, but it's just right now I've been kind of boring and just doing the sort of screen capture stuff. Let me get this real quick. Okay, I'll get that going. Anyway, so why don't we take a look first, at least I'd like to, on dollar yen. Now, why are we looking at dollar yen when we're supposed to be looking at Alibaba? Well, because dollar yen gives you a good idea of this sort of risk off, risk on behavior that takes place in the markets. So immediately following the election, you get this bottoming out and then huge rally in dollar yen, okay, going from 101 all the way up to 119 in dollar yen, right? So when this moves in this direction, that's dollar strength. Yen weakness, that's risk on, basically from here to here. So this is risk on. And then while the NASDAQ kept pushing higher, equities did pretty well in general. Dollar yen started to kind of trickle on down. And when it's trickling down here, this means that you're seeing yen strength. And yen strength is risk off, right? Sort of global risk off. So I was kind of scratching my head about that for a while, saying, what's this all about? Like, why are we seeing this huge risk off in yen? And, I'm a big fan of the fib, so I drew my fib from here to here. Caught a lot of levels. And if you notice, 38.2 provided a nice little level there. And then 61.8, well, heck, even 50 provided some support here. Broke down through there. 61.8 basically got tested. And then all of a sudden, we've got risk on again, right? For a few weeks in a row, really. Just boom, straight up, risk on. But after, and also we had this sort of downward trend channel, which is something that we've seen in the Russell. We also saw it in the S&P 500. So then when it broke out of there, I said, all right, that's it. We're coming back all the way up to this sort of 119 level. Here we go. Well, this thing sort of stalled out at that 23.6 retracement level. Had us all kind of scratching our heads like, well, what's going on over here? So now we've got this situation where the yen's sort of coiling in this much smaller range. And just like we drew our fib on the big picture, you can draw it on the small picture here on the small scale. And you could see where some support levels are going to be down here, right? Yesterday, huge down day, as it was all about risk off yesterday, right? Now, the dollar yen is one of the more slower moving pairs that you're going to see. So to see dollar yen go from 112.50 all the way down to 110.50 is huge. 200 pips on dollar yen is huge, okay? And if you're wondering how huge is that, right? Here's something that you can do. There's an indicator called average true range. So what this does, in this case, this goes over the last 14-day period. Let me close out this money flow. I'm going to close out the CCI too. So what this does is it takes the range of whatever you're looking at, right? So here we're going to apply it to currency, but we can obviously do this with any stock chart. And I'll show you how to use it in a stock chart also. But anyway, so it takes the range on whatever you're looking at. And in this case, takes the average over the last 14 days. And then displays it as a number. So here you can see essentially the yen has a 90 pip range. Okay. Typically. So we move $2, or not $2, but 200 pips. It's currency talk, so it's all weird, right? So a pip is like the smallest, this sort of centness over here, right? So there you go. Anyway, so you can see that overall, it's rare that you get those moves that large, right? Even during extremely volatile times, that ATR is not going to get all the way to 2. Here's a 1.8. So, but for the most part, you could see the whole historically low sort of range that we had. And they talked about that in terms of, the VIX, right? And the relatively low, historically very low levels on the VIX because of how low volatility was on the S&P 500 and everything else. Markets just weren't moving around that much. And that's what you can see here. And if you look at the average true range, you can see how this average true range on the S&P is very low. Started to get a little bit better. And so, but you're still talking 18 handles on S&P 500. That's not too much. And then just look at how it dropped, how this average true range drops down and gets to 10. So this is telling you that on average, we were only moving the whole range on the S&P 500 was only 10 handles, which is nothing, right? And last time we had something that low was basically August of 2016, right? So not a lot of volatility, historically low volatility. And by the way, guys, in August, expect to see low volatility. You get those summer doldrums in the market, and there's just nothing going on. It's just like watching paint dry. It's painful. That's when selling time actually works. But anyway, so now we got this nice little dip in the market. Big gap down in the S&P and, just taken out to the woodshed. They really beat it up. We should be able to see this a little bit better on the ES. So these are the S&P 500 futures. I can dip down intraday. Just look at 5-minute. And we can see. Actually, I'm going to look at just yesterday. So we talked a little bit about the VWAP in some of these individual stocks. I don't know, how long ago was that? A couple weeks ago, maybe? We were talking about the VWAP. So we're talking about it again here today. So that's this black line that's in the middle. So the VWAP is literally the volume weighted average price is what it stands for. So it's basically like, the volume is obviously all of the contracts that have been traded throughout the course of the day. And then the volume weighted average is sort of if you took that on just a volumetric basis, what would be the average price, right? So people think, too often you think in times, you're only thinking in 2 dimensions on this market. You're just thinking price and you're thinking time. But the third dimension here is volume, and it means a lot, and that's what you miss on a lot of these charts, okay? But anyway, you can't write this stuff, man. And when you start to see this VWAP in action, it's incredible. So you've got the market open, around here. I think this is 8:30. Rallies to the VWAP in the morning, and they just dump it. And that was it. If you were trading this, all you had to do was dump the VWAP, short at 23.82, and just walk away from your computer. And when you woke up at the close, you would have been up almost 30 handles on the S&P, which is fantastic. And you'll see it just didn't even stand a chance. Didn't even come close to retesting that VWAP. Just kept getting hammered all the way down. And then today, well, actually, even before then, though, I want you to see. So this was sort of heading into the night. So into the overnight session, into the European session. S&P was all the way up at 23.96. Sold off heavily. Globex lows down here. And then you'll see what happened. Give me just a second, guys. Hang on. got so many alarms and bells and whistles and times and things. Sorry about that. That's one of those annoying phones too that they'll never go away. Okay. So huge rally down. Rally down. What am I talking about? Huge sell-off. Globex lows here. Tried to rally a little bit. Stalled out in the morning. And then VWAP and then forget about it, right? So, you hope, I guess, to get a little bit of a relief rally today. Maybe. That's just not what we're getting so far, right? Little bit of a bounce. Oh, here's the Globex lows all the way down here. I don't know if we're going to come back down there. You see how the market kind of came into the VWAP here earlier today. Pretty much have fought through, but that doesn't mean anything. So we'll see what happens. We'll see if there can be any sort of recovery here on the S&P 500 in the intermediate term. Okay, so there's that, right? So why am I talking all about this? Just kind of setting the stage for what happened and what we were looking at. And that's why you got a 46% spike in the VIX. 46% spike in the VIX, right? Now, the easiest way to make money trading volatility is fading volatility. So you can bet that these guys are all over this thing trying to fade it again, and they're already sitting up in there, right? So what's a good way to fade volatility and mess around with this? You guys ever seen this, UVXY? So this thing is essentially going to do twice, or supposed to do twice, what the VIX does. So it'll end up going down a lot. And I like to mess around with UVXY in the options market. And I'm going to show you how I do it. Is typically I look to buy put spreads on UVXY on days like today. So if you haven't traded a lot or messed around a lot with the VIX, this is, again, really very risky stuff, and you're rolling the dice, and this is like you're going to light money on fire doing this if you don't know what you're doing. So paper trade, guys. Paper trade if you want to learn about it a little bit, right? You don't have to, and you're going to watch and see how these move, and you'll learn a lot. But the cool part about this is, like, I'll end up going out like 2 weeks sometimes, or even a week or two, right? I don't go out super far. And then I look at the put. So here it is. It's trading at 14.55. So at 14.55, you can look at a 14.50. 13, 12.50, whatever. Just do 13, maybe. So I could put together something like that. 153 is going to cost me for the 14.50. I'm going to get back 74 cents for selling that 13. So I got 79 cents here. Difference in the strike price is 150 minus the 79. So I can make 71 on the 79. So I can make 90% here. And if you notice, you're not going to get these, like, often the payoff is only going to be like just about double kind of thing, right? Like just about double. You got to be careful though. If just selling call premium on these things, you got to be careful. Because that's another thing. It's like, oh, why don't I just go here and sell like a call spread on this? And if you notice, your reward on the call spread is really not all that good ever. But these things can spike like crazy, just like we saw. It spiked, 45% in one day. So that means this thing was up an absurd amount. So this closed at 11.63 the day before, and then was up to 15.85. right? Now, people go like, how come when it goes up, it doesn't go up really as much as it should? Oftentimes, you've got backwardation working against you, or contango rather, working against you in this UVXY thing. I don't really have to explain that to you guys. I just have to do this. I just have to zoom out on the chart. Your eyes are not deceiving you. In February 2016, UVXY was $1,468. Split adjusted, of course. And it's at $14.48 right now. Death, taxes, and UVXY going down. The three guarantees in life. But these do spike, right? Now why does that happen? And I was talking a little bit about contango and the VIX futures. So this contango works against you. So that's the difference in these prices as you go further out on the VIX curve. This is a cool site if you guys want to learn more about the VIX. Is VIXCentral.com. Okay. It's an awesome site. It gives you the numbers just right away. Now, I'm going to tell you these contango numbers aren't that big. Typically, it's like double-digit contango going out. So, you got some low contango, but before, I think it was a couple months ago, you had backwardation, so it was the opposite. So, you weren't even getting paid for this contango. It was the opposite. It was negative. So the front month prices were more expensive than the rear months. It's weird. But again, this is just like learning a little bit about this VIX kind of thing and giving you a couple of ideas, right? There is a lot to this. We are not even scratching the surface. I'm just giving you guys a quick little trade idea that I've been looking at, and that's that cool little put spread on that. I like doing that. You could also just go like a little bit in the money and just buy the put outright. Or you can be a little bit braver and you got to do like a little bit of math. You essentially say, okay, well, if the VIX gets back to sort of where it was, that's 1150, 12. So in 2 weeks, the VIX could kind of normal out. Yeah, I could see this coming down, and it could. Because look at what happens on these spikes in this. So you've got it going from 1680 up to 20, and then back down to 1650, and that was 2 weeks, right? So like a 2-week cycle, boom, it's all the way back down. But we just had 1 day of a spike. Who knows what happens next week, next couple of weeks, right? There's no guarantee that the VIX comes back down, so that's your risk. But you could say, okay, 12, if I want to go out 2 weeks, I go out to 12, and you don't have to do 2 weeks. You could say, okay, I'm more comfortable if we go out a whole month, which is fine. And then you can do the same thing. You could say, okay, a 14.11 is what I think is going to happen. And if you notice at 14.11 or 15.11 or whatever you want to do, this is about, so 188.47, that's 141, but it's on 3. So get a little more than double your money if the VIX, settles back down and gets normal again, right? Now, this is not as much fun to play around with when UVXY is under 20. When they do the reverse split, and they do it all the time, then UVXY gets back up over 40, and then it's a lot of fun. When you're back in the 40s, because then you got a lot more room to play with, a lot more strike prices that you can mess around with. So one way to play this spike in volatility is UVXY put spreads, okay? So just something to keep in mind, something to look at. Just follow it. Write it down on paper. See what happened with it. And, you can get used to this. Because this is something that people, like selling volatility is how the volatility guys make money. No question. But it's a really crowded trade, man. There's a lot of people in on that side. So we could be getting close to like a good old-fashioned flushing where they just pound this VIX up like crazy. And you guys got to remember what the actual VIX is. What the spot VIX is is it's a measure of the variance of the S&P 500 index futures contract, like premium, right? That was a lot to say. Essentially, they use the options chain on the S&P 500 to gauge what the expected range on the S&P is. And then the VIX is a measure of that sort of expected range on the S&P 500. So it's very low. People are saying like, oh, this is going to be in a really slow, tight sort of range here. And then when it spikes, then it's okay, this range could get a lot bigger, meaning there could be a lot of downside in the future, and there you go. Okay. So, VIX right now down 5% on the day. Pretty amazing. All right. The task at hand, Alibaba. So, what was that level? 115, where all of that options premium was that we were looking at. They dipped the wick. Look at them trying to dip the wick at the open, getting all the way down to 114 following this report. Obviously bid. Now they're here above the VWAP, bidding it up. Market's starting to rally a little bit. This might be a good little short-term play. Now again, the official trade that I talked about yesterday was, wasn't it short this 115 put spread? I'm pretty sure it was. So selling the puts out of the money here. That looks like that's going to end up, at least in the short term here, working out. We'll see. Obviously, it's going to take a little bit. Let's go to the options chain, see what's happening right now. Now, one idea as this is starting to creep back up. So now you can do that. If you haven't already sold that sort of 115 out of the money options play, you can try and do that now. You can even try and do that like with the front week. I don't know what that looks like. Or you can buy calls here in the hopes that this retraces back to break even over the course of the next couple of hours, right? Next couple of trading days. This is down. It's not terrible. Look, you can get the 118 calls for 63 cents. Oh, it's got to be more expensive than that now, right? But that's like something I'd be looking at. You know, and that's instead of buying 100 shares of the stock, right? Because what you could do is you could buy 100 shares of the stock, have a 60-cent stop on it, right? And that's fine. But you got to tie up a lot of money. You got to tie up $11,000 to do it. Or I could spend 60 cents on that call option, 63 cents on that call option. I've clearly defined what my risk is going to be, and then my upside potential is just whatever, and I'm not using $11,000 to do it. I'm using $63 to do it. So that's one way to look at Alibaba. A little bit of a bounce, but that's if it continues to bounce. We'll see. Looks good right now, though. Above the VWAP. Found support at the VWAP a couple times. See if I can go to a 1 minute. Look at that. Spike down, rallies up, tests the VWAP twice. So the patient guys wait for it to come back to the VWAP again. Looks like it's got a nice little bullish trend here, right? Like they're trying to eat back, take back some of this. We'll see what happens throughout the course of the day. But that doesn't look too bad. So that's one of the reasons why I like doing credit spreads like that. Is you can be, there's such a margin for error, right? So on the debit spread, it's like it has to go up in my direction and I have to be right about it. With the credit spread, it's like, well, just as long as I'm not wrong this much, I'm still going to make money. And that was the case here. Oh, look at you, Kurt. Kurt's getting in there. All right. Let's see. What do we need to talk about today? So, Alibaba. Oh, yeah, that's what I wanted to talk about. Look at Walmart. Okay. Walmart. Target before it, right? So, it's talking about Target. And the reason that Target did not get killed was essentially their online sales were a lot better than expected, up 22%. So that's great. So you had that going for Target, and they responded pretty well. And then Walmart came out, and they had a great report, and they rallied up here too. Okay. Now, I'm still of the mind that I want to slay retail. Because overall, foot traffic's down in these malls, and the stores that aren't adapting and coming up with new strategies are going to get crushed. And I still firmly believe that. And if you err, I was talking to somebody yesterday, if you err on the side of being bearish on retail, I think overall this quarter, you're going to come out ahead. That doesn't mean that all the retailers are going to be terrible, but I think more of them will be bad than will be good. So we already got Macy's and Nordstrom in the books that weren't so good. I mean, and if you're looking for which stores you need to do, go to the mall. Just go to the mall, walk around a mall, see what stores are there. You know, just do some old-fashioned research, man. Just pound the pavement and see what you got going on at your local mall. And that should give you an idea. And you could talk to the people that work there, you know, and they'll talk to you about whatever's going on. You know, they're not going to give you details. Most of them don't know details because they're just working retail, so they're just like killing time and they don't know what's going on. All right. Lots of things to cover, though. Okay, guys. Now, I'm seeing your questions come in here. So I'm going back because I'm pretty much done with kind of my general sort of overview that I wanted to talk about. What do we want to look at? So we talked UVXY. Ross. What's the ticker for Ross? ROST, right? Put some indicators on here so I'm not flying blind. Doesn't look fantastic. Got some negative trend lines, negative trend channels going on here, right? Breaking through these bottoms. They're probably going to be, I need my Zach's rankiness up here. Let's get some Zach's rankiness for Ross. Just to see what they've got going on. Oh, they're today after the close. Okay, pricing consensus. I love the pricing consensus chart. Some optimism. Optimism here at Ross. That's interesting. I mean, this is a great pricing consensus chart. Look at that. So, I don't know. A little better chart than I thought it would be, right? Given this, you know, why are they off so much if those estimates haven't really come down all that much? Maybe they overcooked this Ross a little bit. Like I said, though, it's like you really got to come with it in order for you to have a nice reaction in retail to this now. And then granted, this is a little bit, you know, it's like the market changes every minute. So when the market was at all-time highs, we were looking for villains. Now that we got beat up yesterday and retail's been beat up, maybe they're looking for heroes. Let's look at what the XRT is at. Yeah, there's still no bullish reversal right there, right? Just kind of like but I really like this price consensus and EPS surprise. I mean, this is nice. So when you're making these decisions, the overlying decision maker for me is always the price of consensus. And that's why I start every one of our sessions with this, because that's what it's all about, guys. It's all about earnings. So if these earnings reports and these earnings trends are positive, earnings trends don't reverse as quickly as price trends. Price trends is, investor sentiment, essentially, is what that price chart is. And that can change on a dime. But these EPS trends take a while to develop. All right, where else are we at? I had a couple of people talking about LB yesterday. And had I done these guys, I don't think that there's any way that I would have been bullish into this, right? I would have lost money on this. Because look at this. And honestly, I'm not mad when I lose money on this, right? If you're sitting here and you see this earnings trend of this continuing to go down, quarter in and quarter out, dropping, and it looks terrible, right? If you go with the trend, you're going to be right multiple times in a row. If you were a counter trend guy and I was saying, no, this is the quarter it's going to turn around, this is the quarter it's going to turn around, this is the quarter, you're going to be wrong 4 or 5 times before you're going to be right once. So if you go with the trend, you're only going to be wrong once. Now, you notice it's a different there. I'm not saying you're not going to be wrong, because we're going to be wrong. We can't control when these things happen, when these reversals happen. It's going to happen. The trend is your friend until it ends, and when it ends, forget about it. So it looks like this might have ended here, at least in the short term. But I don't think I would have changed. I don't think I could have found a way to be bullish on L Brands heading into that report. But the discount retailers, right? And this is always the thing. It's because I think really the focus has to be, are you brick and mortar and then you're done. It's, are you in the mall where the foot traffic is down and you're getting the problem? That's, I think, where it's going to be. Which was surprising, again, to me, that LB, with Victoria's Secret doing well, right? Still surprising. What else do we have coming up soon? When's Michael Kors reporting? I can't wait. Cannot wait for them to report. Who else? Like I said, guys, literally just go to your malls. Did Buckle report yet? I love messing with Buckle. It's BKE, isn't it? Buckle must have reported because they're up today. I'm not fooled by this either. Let's see. Maybe they had a little bit of a turnaround, though, on the Buckle. See, again, like these just terrible trends. And then it's like, wait, we're not totally dead yet, right? A little bit of a reverse. They do have a beat. They beat here too, though. So don't be too surprised. But you think all of a sudden Buckle's going to turn the corner here? I don't know. I didn't get a chance to read this report on Buckle, so I'm not going to talk too much nonsense about them. What else do we have? We're talking a little bit about Applied Materials. Man, I'm like way behind in the chat. I'm like all the way up here. You guys are all the way down here now. Oh, yeah, Ulta. Oh, Gap. Okay, hang on. Let's go back to this. Anyway, so Applied Materials. I mean, that's beautiful. Look at this. That's beautiful, right? That looks great. The Gap. Gaps look like look at maybe the trough is already in for the Gap. See? So this is what you're gonna see now, or what L Brands and Buckle and stuff hope that you're gonna see, is that the real nasty slide is ended, and then they're gonna dig themselves out. That's what they're hoping. But if you notice here with the Gap, specifically on 2017, the slide's not technically over, right? I think I always do Ulta. I almost always do Ulta, and I've been right on Ulta a lot, which is great. Which probably means that this time I'll be wrong on Ulta. But there's another price consensus and EPS to price chart that doesn't quit. This is what you love to see. Not just huge year-over-year growth, but these estimates are increasing each year. Each year you're getting increased EPS estimates, increasing bullishness. So that's all great too. And we're definitely going to cover Ulta. When are they reporting? They're kind of mid-cycle though, aren't they? Like we've got, okay, the 25th. Oh, next week. Definitely going to do them next week. Okay. And yes, I'd like to switch up. We've done a lot of these retail names. Take-Two. We got to start digging in the video games a little bit. What else? I was looking at we had our meeting yesterday, and Nina came out with the top stocks in the market. And there was a lot of biotech on that list. The gaming stocks were on that list, though, too. Activision, one of the top stocks this year. And what was the other one? What was the other one? It was Activision, ABTI, right? ATVI. There we go. Look at Activision year to date. Oh, man. Are you kidding me? Just look at that. Wow. Huge move. Was EA one of them also? Look at the move in EA. Look at this gap up in EA. Yeah. Fantastic stuff happening here. So, lots of fun. Lots of fun stuff. Yeah, we did good on. We've done very well on Ulta a few times. Vision and then Take-Two. We're gonna do Take-Two. Yeah. The thing is with Take-Two, like, oh man, look at this. Whoa. Gaming doesn't care. And guys, look at this even, right? Yesterday's nasty dip. Already starting to get some of that back. I'm going to give you one. I'm going to dig into the vault here, though, guys, for you. So, gold. I showed you that yen chart. The gold chart should look awful familiar, too. And look at how this thing plays off of fibs also. Fib here, fib here, fib here. Dips below the fib. Now we're at another fib, right? If this dollar yen fades off, I don't know. This could find some support here. The yen's so tricky. If it comes back down here, breaks that, gold's going to go crazy. You're going to see huge rallies in gold. And if that happens, we're going to be messing with these guys We're going to be messing with these guys. We're going to be messing with these guys. We're going to be messing with everybody. Everybody we can. GLD even, right? So there's a lot up in the air. We're going to see what's going to happen over the course of the next couple of weeks. These investigations on Capitol Hill, we'll see. We'll see what happens. All right, guys. Now, I'm going to cut this Q&A short here today because I got to get my ducks in a row for our little John Deere thing we're going to do, okay? So John Deere's coming up. Should be a nice little break, right? Nice little transition from what's been happening here, what we've been talking about. So we're going to go ahead and, like I said, I'm going to shut it down here. If you guys need the link, I already sent it out. Pretty much everybody should have the link. Yeah, it was in that last email, so that's good. If not, it's in the channel. There's like a live event happening here, so I know everybody won't be able to make it over to there, but that's fine. But I'm going to go ahead and transition on over to there. Yeah, that's it, guys. So I will be back in about 15 minutes. Let me get a little bit more coffee, a little something to drink, and we're going to come back with John Deere, okay? So I'll see you all in a few. Thanks a lot.